If you asked a question about, why did you start this fund? The real reason we started this fund is because we knew small and mid-cap dividend payers were going to outperform large cap dividend payers over a business cycle. We knew it was differentiated, and we knew it fit really nicely into an advisor's asset allocation strategy. The NCM Income Growth Fund is a Canadian equity balance fund. The fund invests in Canada and focuses in on small and mid-sized growth companies. The fund has a risk rating of medium. I often get the question about the fund being small mid-cap focused and whether or not small equals risk. My answer to that is that's not the way the fund is being managed. These are real businesses. We call them mini blue chips because they are big enough, strong enough, with solid balance sheets, enough to pay a consistent dividend, a dividend that we think is growing. When you put a bunch of businesses together in a portfolio that grow faster, that have better margins, that have higher return on equities, have higher return on capitals, have a 50% payout ratio, and have higher free cash flow yields, typically you might not outperform every week, every quarter, every month, but certainly over a business cycle, with that kind of investment methodology, the fund should outperform. We're asking people to think about splitting the ticket. Take some of your dividend-focused holdings, that sleeve of your portfolio, allocate a sleeve to the Income Growth Fund. There's a few different reasons for that. One, we have a very high active share, meaning our fund is different. A lot of our competitors' products and a lot of advisors will invest in REITs, utilities, and pipelines. We're focused more on the growth side of the dividend story. So those companies that have a low payout ratio, meaning that they reinvest back into the business, but still have enough cash flow and free cash flow that they can support the dividend and growing the dividend. And in terms of predictors, your free cash flow metric is your best predictor of stock price movements over a business cycle. So the dividends provide downside support in terms of a bear market, plus dividends also help you outperform in the good markets. The fund is 18 years old. I've been managing it over that time period, and it's been managed with the same consistent investment methodology. It is what we call our proven and repeatable investment methodology.